What do you make of some of this cash positioning when it comes to Berkshire Hathaway and the fact that Warren Buffett's saying he's not seeing a lot of opportunities out there?
I would have liked some more elaboration from Warren in that letter, rather than just that one sentence.
But don't actions speak louder than words? If you're selling more than you're buying for 9 straight quarters, what else did you want him to say?
Yeah, no, for sure. The market trades 22, 23 times earnings. I think we're in the midst of a regime change here in the markets, in the global markets, where U.S. Mag 7 is no longer going to be the dominant driver of overall market gains. And that what we've seen so far, investors are trying to find things in Europe, they're finding things in Asia. It's not just those 7 that are sort of stealing all the market thunder. And I think that that's a major change, at least for the S&P index, which is still dominated by those names. So I think hopefully investors are going to sort of widen their imagination in terms of things to buy.
Cole, coming over to you, you're also a Berkshire Hathaway shareholder. What do you make of some of the cash positioning when it comes to Berkshire Hathaway and the fact they've actually been net sellers when it comes to equities now for basically 2 years?
Yeah, it's a great question, and thanks for having me, Frank. So the simple answer is that investment opportunities, like Buffett said, are as scant as his opinions, whether they're negative and positive on equities in general. There are not Berkshire-like opportunities out in the stock market, which means there are not S&P-like opportunities out in the stock market. That's the real conundrum if you're a big investor. So what Buffett's not saying is, there's no opportunities. That's not what he's unequivocally saying. He's just saying that if he's going to put anywhere from $1 billion at the minimum to really a $10 billion investment into something, he just doesn't see anything broadly. And to follow what Peter's saying, when he says regime change, this is nothing dissimilar to the Nifty 50 in 72, the dot-com bubble in 99, or if you hearken from a bigger picture level on a global basis, this is like Japan in 1989 or China in 2010. The problem is the dominance of stock returns is not sustainable. It's not unique to us. It's just true for many markets and governments out there. And the reality is most of the wealth management business and really wealth in the world is tied up in the S&P 500. And therefore, it can be very damaging, even though the fact is that American exceptionalism has been practiced in capitalism in a very unique way. The problem is most investors won't make money off that over the next 10 years.
All right, Cole, I kind of want to lean in some of the things you're talking about, the fact that Warren Buffett's not seeing a lot of opportunities here in the U.S., but he is seeing opportunities overseas, at least in Japan. He said they would continue their investments when it comes to Japanese trading houses. Do you agree with that kind of take, that there are better opportunities overseas, whether it be Japan and possibly Europe? We just kind of hit on the German small cap index having one of its best days in several years. Are you seeing opportunities, specifically Japan and Europe?
Well, let's put it this way. If you go look in what he said about Japan, he's effectively doubled the Berkshire money in Japan looking back over the last 6 years. Now, is that historically Berkshire-like in returns? The answer is no. A 12 to maybe 14% compounded return is not on the high end of outcomes for what Buffett has sought historically speaking. The reality is, for the kinds of risks he wants, that's a great return. The problem is he can't sink, $100 to $200 billion into those kind of opportunities. So what I think it says is if you're a BlackRock, if you're a State Street, if you're a big asset manager, congratulations, there's no opportunities out there like there is not for Berkshire Hathaway. If you run $1 billion to maybe $30 billion, there's opportunities for you, or if you're a small investor, you're a retail investor, there's opportunities in those spaces. The problem is most of the capital is tied up with the biggest people in the world. Therefore, there's no opportunity for the asset managers.
Peter, I'm going to come back over to you. I mean, we're spending a lot of time talking about Warren Buffett's doing. Of course, Oracle of Omaha, a very famed investor, but a lot of regular people are trying to figure out what to do with their money today. What would you tell them? Where are you seeing opportunities right now, whether it's the bond market, the equity market, maybe commodity market? Where are you seeing potential upside when the rest of these markets seem to be facing a lot of volatility?
Well, to follow up on what Cole just said, the whole world is in the Mag 7. So we're trying to find things ex-Mag 7, finding very attractive opportunities in oil and gas stocks, commodities generally, uranium, precious metals, gold mining stocks. We own a bunch of that are very attractive. Fertilizer stocks and ag. Also beaten down food stocks. And also in Europe, speaking of investing outside the U.S., finding opportunities in Asia, very bullish on the growing middle class story in Asia, and also energy stocks in Europe. Shell and BP, for example, are trading at almost half the multiple as Exxon and Chevron. So I don't think that this shift away from the Mag 7 is just, okay, a quarter or two. I think this could be a multi-year thing where investors are going to find money to be made elsewhere and outside of the U.S.
What about specifically Germany? The person that we expect to be the next chancellor is saying that Europe needs to find its independence from the U.S. Also, biggest economy, biggest defense spender. I think that was one of the areas that you're also looking at.
Well, not only an independence from the U.S., but they also need to find growth again. Germany obviously hurt themselves with the Russian war, pay more for energy. They need to turn back their nuclear plants. I think Europe as a region is finally understanding that a lot of their economic sclerosis is basically doing it to themselves. And I think there's going to be a lot of easing on the regulatory state in Europe that could increase economic growth in the coming years there.